Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. So it's just a very low daily range, getting narrower, slow bleed to the upside. You can see it here on the daily chart. New all-time high, new high of the moment, 39.24. They popped. They ran it up into the 18s. They ran it back into the Europe Open, and Europe ripped it to 24, faded it back to 16. So you're seeing really violent moves tucked inside of a very small range. As we hit the hourly chart, this was yesterday's regular session afternoon. You want to talk about a meat grinder? There's your meat grinder. At one point, the daily Bollinger Bandwidth on the hourly chart got to 0.28. That's as narrow as we've seen it in some time. So you did get a little bit of a the rubber band has to move type of a thing right here at about 8 o'clock. 8-10 handles out of nowhere, and then it just really flattened out again, and it's drifting, like I explained before, with some fits and starts along the way back towards the hourly mid band. And as long as price continues to bleed and come back to mid band, bleed and come back to mid band, you're going to keep getting what you see here, which is just this slow drip to the upside. Whoops. All right, little technical difficulties, which we've seen, going back. Consolidation, expansion, consolidation, little expansion, consolidation, little expansion, consolidation, little blip into, I don't even know what that was yesterday, little expansion. Everybody's waiting around for it to pull back. Everybody wants the pullback. You have people anticipating the pullback. The pullback's not happening, so they get squeezed, and it's just this big rinse and repeat to new highs, new highs, new highs as weak shorts get squeezed and popped. Not by any great distance, but when you look back after 5, 6, 7, 8 sessions, you're like, whoa. We're up at 39.24, 39.25 with 39.50 on the horizon. It's what's next. It's what's next. So for the open today, volume weighted average price, 17.5. You've got proprietary moving average, 18.5. Hourly mid is basically 15, or it will be by the time we open. So it's got to sort out this 15 to 17 area. You've got the 24 new all-time highs off of Europe that were violently faded back. So you've got this 24 to call it 15 area that's got to get sorted out. My concern, and it's not even a concern, but it was, it's kind of what I expressed to the room yesterday, is just if it wants to stay consolidated, you're gonna get head fakes up and head fakes back that aren't going to go anywhere. And if you get caught as a trader chasing the laser pointer back and forth all day, you're going to make your broker a hero, and you're not really going to have a whole hell of a lot to show for it by the end of the day. The reality of consolidations is that you're basically paying the check for, all of this movement that we got earlier. I mean, it was a great first week of February. We had some great weeks in January, but after we do that stuff, it's gonna burn off some of the froth, and that's what's happening here. Now you say, well, it hasn't dropped out and come back in. Well, why does it have to do Wile E. Coyote off a cliff? It doesn't. People want it to, because it's super fun, but the tape is bid, it's staying bid, and it has no real intention of doing that. And the bears aren't going to pull that off unless you get news. Unless you get a piece of news that sticks, that makes it go down and want to keep going down, these little blips to the downside will be bought. And to the extent weak shorts get squeezed, they'll continue to bleed up to little nominal new highs and rinse and repeat, and off we go. So how do you trade it? You can be short. We had a decent short yesterday. But when it stops working, you got to get on the side of the long. And then when the long, you got to take your profits there as well. Let runners work, but to the extent what we're doing in the room is we're trying to get our 2/3 off. And the 2/3 adds up to more than what we want on any particular trade anyway. And we get our day goals locked in, and we get our week goals locked in, and we go from there. And then, we basically end up with a bunch of paid free looks at whether or not a particular move wants to be the move up or the move down. That's the way we do it, and it's been incredibly successful for us for almost a decade now. But to the extent that it's not ready to be the move up or the move back, then, you take that runner at some point and you expect it to revert back to the mean. Don't get caught, though, when it really tightens up going long, short, long, short, long, short. You'll go crazy, and by the time it's ready to really move, you will be beat up psychologically, slightly beat up from a capital standpoint, and you'll say, well, I'm not doing this again. I'm not doing another one. We did that. I'm not doing it again. And then you know what will happen? There's the move. There's the move. Seen it a million times. So, take profits where you find it. Try your best not to overtrade it. And this thing will move in a significant way when it's ready. But right now, it's working off froth. But don't kid yourself. It's bid. All right. Everybody have a fantastic day. Be safe. Be healthy. Take care. Trade them well. Come check out the room. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.